Credit Suisse has sent shockwaves through the stock market as fears of a broader banking contagion continue to spread. In today's show, I'm going to talk about what this banking contagion may mean for crypto and crypto prices, as well as running through my Bitcoin or Ethereum plans. Because spoiler alert, there are some key levels that if Bitcoin and ETH break, I am very interested in 5 altcoins, which I will be sharing with you in today's show. I've got some trade plans for a variety of sectors, one of which is the AI sector because of the new ChatGPT launch, and there's some cool stuff happening over there. And I also want to talk about a couple other narratives at the end of the show, a couple more DJ narratives that if we get a significant move upwards, I think can outperform versus the rest of the market. But of course, before we even consider longing alts, that we have to verify what's happening with this banking collapse and work out how it may affect crypto markets. And of course, I'll be going through my charts and updating you based on what we talked about yesterday, how those trade plans are playing out, and what I potentially envision over the next couple days from Bitcoin and ETH. Spoiler, it's not as dire as you may think, but it's still obviously massive news, this banking contagion. And it is really affecting equities, more so than crypto, actually, because Bitcoin's adopted this store of value kind of flee to safety narrative, at least over the last week. That's helped it hold up in price relative to other assets. But the overall global economy and the stock markets across the world have been struggling in the face of what is a pretty significant headwind. Now, I want to touch on Credit Suisse first, because essentially the Credit Suisse share price hit its all-time low. They're actually down 98% from all-time highs. Now, when I was looking at the Credit Suisse chart before, I literally thought it was a shitcoin. Like, I couldn't believe my eyes because it was down. It basically looks like the Luna chart because it was down 98%. But it's not actually the Luna chart. It's the chart of one of the world's biggest banks, one of the biggest banks in Europe. So it's pretty crazy that a banking chart with real customer deposits, real loans, can look like this. It's pretty insane, but that's what's happening right now. We're seeing collapses not only across banks like Credit Suisse, but across some of the US's biggest banks, like First National Bank was down a whopping 70%. We also had the Washington Bank, which was down like 70 to 80%. Obviously, SVB, Silicon Valley Bank, they basically went under. So a lot of banks are collapsing, and fears of contagion continue to spread. The TLDR on the Credit Suisse situation specifically is they published their annual report, which was scheduled for last Thursday, but ultimately it was delayed by a call from the SEC. And following discussions with the SEC, they confirmed its 2022 results, which showed a full year net loss of $8 billion. And their shares were down 5% as markets opened on Tuesday, but those returns continued to get worse and worse and worse as the market opened, as we can see on the Credit Suisse chart here. If you want to go on to, let's say, the daily chart, we can see that there was a significant red candle, or on my chart, it's going to look like a black candle, but there was a significant dip on the daily open with share price crashing 25%. And as one of the biggest banks in Europe, Credit Suisse being impacted could potentially have flow-on effects to their counterparties, which are other financial services, other banks in Europe that may also be affected by the same rising interest rates, which is essentially the crux, as well as the overbearing of risk, as to why a lot of these banks are now experiencing issues. So we can see Credit Suisse clients, they weren't happy, and they decided to pull out $121 billion in deposits over the last 3 months alone. That's roughly $40 billion in withdrawals per month. Now, just for perspective, the Silicon Valley Bank customers pulled out $42 billion in total, and now SVB is gone. Credit Suisse, being the much larger bank, has been able to withstand so far $121 billion worth. And that's why there are rumors and a lot of fears about the bank potentially collapsing. And those fears were made a lot more pertinent as their biggest backer, which is a Saudi shareholder, refused to provide them with further assistance. So they're refusing to come to the rescue like they have in the past, providing assistance, essentially wiping their hands clean of the situation. And that made fears worse, because if their biggest backer doesn't come to the rescue, who is going to come to the rescue after they're facing significant headwinds and are holding 578 billion assets? And just going back to that Silicon Valley Bank comparison, they had 200 billion in assets. So the Credit Suisse problem would be a bigger problem in the making. And just to contextualize this entire banking collapse, if you do compare the current amount of total assets amongst the failed banks so far, so that's Silicon Valley Bank and Signature Bank, that amount is almost the same so far, and it's only been playing out for like a couple of weeks, so far as 2008, where $374 billion worth was wiped across 25 banks. So if you do want to compare this banking crisis, I don't think it's being overblown. I don't think it's being overhyped, considering that it is on track so far to be bigger than 2008. Now, that doesn't mean the ramifications are as big as 2008, because it's a very different monetary environment. But it is definitely not a good sign that you're getting massive contagion spreading across the entire banking ecosystem, specifically in the US, but also now what we're seeing across Europe as well. And the stock market did not like this. It did bounce at the end of the day yesterday slightly, but it was down 1.5% on open. For the week, it's slightly up, but if we look on the daily chart, this doesn't look great from the stock market. So technically it is above its blue line trend, but it has significantly cooled off since its rally to the 4,200 point mark, which is interesting considering the probability of rate cuts is now significantly higher. Like, we're seeing expectations for next FOMC meeting actually favoring, or at least starting to favor, especially amongst the top analysts, the chance of no rate hike next FOMC. That would typically send stock market flying. That would send crypto flying. That would send bonds crashing, but it would send the Dixie dropping as well. But what we're seeing now is actually like a total systemic collapse where the stock market's dropping, the DXY, although it pumped, it's dropping, and bond yields are dropping all at once. Like, something is breaking in the economy when the stock market isn't reacting to the thought of rate cuts positively. And that's because the thought of rate cuts are being completely outweighed by the looming threat of more systemic risk amongst the banking system. And that's why stocks have been dropping. And I'm going to get into Bitcoin in a second and how that ties into all of this, because it's doing something different. It's actually been pumping because the narrative is now shifting for Bitcoin, and it means something big for crypto. But for now, we're just looking at stocks. So back on the Credit Suisse situation, at one point yesterday, and now it is slightly lower because there was news that the Europeans would underpin Credit Suisse in the face of a total collapse. But at one point yesterday, the probability of a default for Credit Suisse was 47%. That's a crazy probability. Like, saying that one of the biggest European banks would have almost a 50% chance of going down completely. That's pretty nuts. We could see this exemplified by the cost of insuring against Credit Suisse CDS price at one point during intraday trading yesterday. But the Swiss central bank stepped in and said it will backstop Credit Suisse if necessary. So they said that it would step in and provide support if it had to, and it would basically underpin the bank in the face of a total collapse. So we know there's a backstop here, right? It's probably not going to lead to a full-blown collapse where customers lose their money. It's probably going to lead by action from the Swiss central bank. And then obviously, as an extension of that, if more European banks have issues, it's very likely, at least in my opinion, that the European central bank starts stepping in as well and saving some of the other banks if the contagion does spread. So that is very similar to what the Fed did on Monday with their plan to make customer deposits whole, which was essentially a one-year plan which implements a silent quantitative easing, if you want to call it that, which will essentially allow a cash injection into bank swaps to allow customers to redeem their funds that they had deposited. It doesn't save equity holders, so the shareholders get screwed over of these banks, but the customers get saved. And to be honest, I thought that was actually a pretty good move by the Fed. They're in a tough position, but that was the most logical move for them to take. Europe may choose to do a similar thing if this gets worse. So what happens if they're forced to bail out the European banks? Well, that could be a bullish catalyst for Bitcoin, because in the face of the US bank drama, Bitcoin actually did rally. So if the Europeans start injecting liquidity into the ecosystem to save their banks, and obviously they start cutting or at least significantly dampening their rate hikes due to fears that interest rates have maybe overcorrected and are now affecting the banks, then where are people going to run? Where are people going to put their money? And the answer so far has been Bitcoin. Not altcoins yet, but altcoins, they run off the back of Bitcoin. But mostly, as a Bitcoin-led pump, it's been Bitcoin. So for me, we're in a really weird situation because we're seeing things break in the global economy. We're seeing stocks drop. We're seeing bonds being repriced. We're seeing so much turmoil. But in the face of all of it, Bitcoin is actually pumping, and it's kind of developing its own little narrative at the moment, which is weird because if you asked me a few months ago, like if stocks went down 20%, Miles, what would Bitcoin do? I'd say, oh, Bitcoin's down 30, 40%. It's going to hit new lows. But we're seeing a shift in the way Bitcoin's being perceived because we're seeing a shift in the macro events that are occurring. These events aren't stock market collapses solely being driven on risk pricing. That's the major difference here. So when stocks collapse based on the thought of rising interest rates, that is a repricing of risk in the market. The market doesn't want to take on as much risk because it doesn't have an appetite for risk versus alternatives like bonds. But when you get a stock market crash in the face of an economic collapse, that's very different. It's a repricing of risk in one way, but it's less so a repricing based on interest rates, and it's more so a repricing based on consumer sentiment and fear. And that fear is not applying to Bitcoin because Bitcoin kind of has its own narrative as a store of value, digital gold. Now, throughout history, that hasn't been sustained, and I don't think we're at the point yet where we can like hand on heart say Bitcoin is an amazing store of value inflation hedge. It's not. One day, I think it does become that, and we're seeing signs now that it's heading towards that. But right now, we can't say for sure that it is. But what we can maybe come to the conclusion of is that at least in the short term, at least in the next few weeks to maybe a couple months, that is how Bitcoin's being perceived in the market. And as long as the price action of Bitcoin is telling us that that's the case, then that's how we'll trade. Just a few other reasons why Bitcoin is being favored as well. The stablecoin saga did a lot for the Bitcoin narrative. When people were swapping out of USDC, where were they swapping? They were swapping into Bitcoin because it was just more attractive at the time. Sure, you take on a bit of market risk, but you can avoid, a lot of people swapped into USDT, but there aren't many good stablecoin alternatives anymore. So Bitcoin acts as that on-chain store of value, Ethereum as well. That aided the narrative. You've also had global economies collapsing. Like, for example, like Nigeria, who had a huge inflation problem and actually stopped cash withdrawals from their ATMs, and they've had bank run issues as well. Bitcoin was trading at a 70%, 60 to 70% premium at times in Nigeria. I think it's like 40% now, as per reports. So Bitcoin trades at a premium in a lot of countries that are feeling the effects of inflation. That's not a narrative that's going to go away. That's going to continue to grow as currencies struggle versus the US dollar. When you hike rates like 200, 300 bips, like what do you think is going to happen to economies that are denominated in other currencies versus the US, especially if they're reliant on imports? If they're reliant on imports, they're basically screwed. So unless they're like self-sustaining economies, they're basically screwed. And most of these like smaller countries, they are reliant on imports. They're not very efficient, and they get hammered. And Bitcoin is the solution for a lot of those countries. Now, I'm not saying that'll happen overnight. That's a long-term thing, but that is genuinely a narrative that's now starting to emerge. If we do get a global financial collapse, can Bitcoin be that kind of safety asset? I think one other important thing is the regulatory view of Bitcoin. So the SEC has definitely made it their mission, and the Biden administration, to go after crypto on and off ramps. There's barely any crypto banks even left, which is a huge issue, and I did a video on that, and that's another discussion. But underneath the scope of their regulatory mission, one of their goals may be to label certain assets securities. But we know the Trading Commission, time and time again, has come out and said Bitcoin's a commodity. Sorry, the Commodities Future Commission. They've said Bitcoin's a commodity and not a security. Ethereum, they've also said, is a commodity, but it's much more gray because you had New York come out and say that Ethereum is probably a security. You've had other jurisdictions call ETH a security, and then you've got the Commodities Commission saying it's a commodity. So it's less black and white than Bitcoin, which is very, very, very unlikely to be called a security. And that puts it in a unique position versus other cryptos that have somewhat of a dubious future in legal terms. Not in price terms, but in legal terms. So that also does help in the face of like what is a pretty strong Operation Choke Point type headwind. So all this has resulted in something remarkable happening, and that is Bitcoin rallying versus stocks and equities. We can see here Bitcoin over the last week is up 12% versus the NASDAQ, which tracks the tech stocks, which is down 12%. So basically like a 24% differential now starting to open up between Bitcoin and the NASDAQ. This is the first decoupling we've seen to this extent in months, basically in a year. So typically Bitcoin trades in tandem with stocks. Look at Bitcoin here. It did run against the stock market, but then it started to decline alongside the NASDAQ sell-off as people were like fearing an increasing pace of rate hikes. Then what we saw was Bitcoin starting to pump versus the stock market, which started to drop. And we can even see this on the daily with Bitcoin up 9% versus the stock market at 8%. So we're starting to see a decoupling. And if we look at the charts, the price action on Bitcoin is very different to the price action in the stock market. And it definitely can rally in its own right. And the thing is, it's kind of a bit of a two-pronged effect, I think, because if the stock market drops now, Bitcoin can be resilient. But if the stock market pumps, I don't think people are going to start selling their Bitcoin for stocks. I actually think Bitcoin is still treated like enough of a risk asset for it to benefit from a stock market pump as well. So it's kind of like a double whammy of it can be resilient if stocks drop. It makes it harder, but it can. But it's also going to probably still capture upside from the rate cut narrative. That's still a thing, because Bitcoin thrives in a lower interest rate environment, right? That can also help Bitcoin in risk terms perform quite well. So let's do some basic TA and look at currently where we sit for Bitcoin, and then I'll outline my plan and my plan for altcoins as well. A little bit has changed since yesterday, at least in the short term, but I think the long-term plan does remain the same. So I'll reiterate that for the people that didn't watch yesterday's show. So we still are in a range. I know it's boring to say, you've heard it a million times, but that's just the case. We're still in a range. Deviation for FTX lows, deviation yesterday for range highs. All right, that's basically the first thing to affirm. Just to affirm your upwards price targets if you do break the range. Just doing some basic TA on where these previous key levels are. 28 to 30K makes a lot of sense. That initial breakdown, my charts are like glitching a little bit, but that initial breakdown at the pre-lunar collapse, that was around 28. We can see in this area here on the weekly. And then you could even make the argument it goes as high as 32K, because that was basically the level that Bitcoin hit during that original sell-off in the bull run, if you remember. And that's been quite a key level for price action as well. So if that's your target, then you can assume if you do get a clean break of range high, then Bitcoin does have the potential to head to 28 to 30, somewhere in this zone. It may get front run slightly. It may just make it into the 28K zone and then kind of lose a bit of momentum, and then you maybe want to flip short for a push back into the range. I don't think it's necessarily a new bull market if Bitcoin hits 30K. That's the first thing I want to make clear. If we do break range high and pump, this doesn't mean it's a new bull market. This just means it's facing resistance and it can come back down. If it comes back down, tests range high, successfully tests again, and then makes another push up, then we can look for the reclamation of a higher high, which would be an indication we are in a new bull trend. But until that higher high is made, I won't be getting too euphoric around 28 to 30K, that's for sure. But considering we're at 24, what would 24 to 28 do for alts? Likely fireworks. If I'm being honest with you, alts would absolutely explode if that does happen. So is that going to happen? That's the question now. Are we going to get a break of range high? Well, let's go to the daily chart and then I'll go into the 4 hourly to give you a shorter view of price action. On the daily chart, things still don't look too bad. So we did have a clean retest of the 24.3 region. That's a pretty key region for Bitcoin. That was the previous level we rejected off before we headed down to mid-range. And this mid-range level was that initial sell-off before price action drove us to test the 25K zone again. So this is actually quite a key level, which we've held above. That's good for Bitcoin. On the daily, this was not a great candle. Clearly, you would have wanted consolidation above 25 for like an immediate push to the upside. But this didn't surprise me. And it was something that I talked about in yesterday's show. The reason why we did get that major deviation above range high is because just think about it very logically. Where did everyone have their shorts? Well, they had it at the previous highs. Everyone was shorting at 25.2. That's the level everyone and their dog is looking at. So when everyone's shorting 25.2, what happens if the price goes slightly above? They all get stopped out because they all place their stops slightly above, maybe at 25.7 or at 26. And when you have everyone placing their stocks above, then all that needs to happen is those guys to get squeezed for price to push up significantly. So we saw that push up to the 26K zone because everyone was getting stopped out. And Bitcoin didn't have enough firepower, not enough sell pressure coming into the market to counteract, not enough buy pressure in the market to counteract the shorters to continue to push higher. So you would have needed a lot of buys beyond the forced buys from shorts being squeezed to get Bitcoin up to the target of 28 to 30, which just clearly wasn't going to happen yesterday. So what happened instead was we had deviation above range high and then a wick back down into the range. Extremely normal price action. Extremely normal, nothing abnormal about it. What was a good sign for Bitcoin was this retest of the 24K level. That was a positive sign that potentially we can come up and test range high again. The more you knock on the door of range high, the higher chance it has of breaking, right? So just from a pure Bitcoin perspective, not even looking at the bank Contagion or stocks, just Bitcoin, it's looking pretty good. And it's also looking good versus equities. Let's go on to the 4-hourly chart now. So on the lower time frames, it looks a little bit worse for a couple of reasons. One, because you had this secondary rejection of range high. You had a push down, which obviously you don't want to see. We probably would have wanted to see an immediate retest and confirmation above 25.2 to be like super bullish short term. But the positive out of all of that is that we did get a nice test of that 24K level that I talked about. So this is now setting up okay for Bitcoin. And I wonder if on the hourly we can draw in a trend. Yep, we can. So this is setting up okay for Bitcoin for another test of range high. So if you want to draw in the diagonal on the hourly to make it tradable, at least on the shorter time frames, then you want to break above this level. And then we're probably pushing back up to 25.2. So if you get a break of this on the hourly, sustained momentum, you clear these levels, we're probably going back up to range high, and then we're going to test again. What happens above range high? I don't know. I can't tell you. We're going to need to watch the volume. So make sure you've got your volume indicator on. See if we get massive buy volume coming in, like this push up yesterday or the day before. See if some buy volume starts to kick in. If you do get significant volume, and also track funding rates to see what the short versus long spread is. If we do get volume and the spread looks good, then we'll be able to affirm whether we're going to actually get a clean break. But until then, this is the trade. This is the long to the range high zone that you'd close out at range highs. That's like a short-term trade. Obviously, long-term trading, we want to see a break of range high on the daily, also on the 4-hourly, but also on the daily. And let me just put this on the lower time frame. And then we want to see a candle close above. So we want to see a close above and then resumption. It doesn't even need to clear these highs necessarily yet. Obviously, that's the level you need to clear to go to 28 to 30. But all we need to do is consolidate above range high. We haven't really done that yet. We keep getting rejected. Until we consolidate above, there's no new alt season or bull market or anything crazy. So that's still that key level on the higher time frames that we need to clear for a huge rally. Until then, you just saw my hourly chart. You can probably play like a smaller long. But I mean, it's not a high conviction trade. Like it's not a high dollar amount trade. It's like your big trades come at the breakout of range high, and now it's just like small trades for a bit of fun if you're an active trader. If you're not an active trader, probably best to wait for the break of range high and then look to long some alts, which I'm going to get into at the end, what alts I look at if we do break range high. Ethereum, looking similar to Bitcoin, except it is forming a flag. Now, this 2018 all-time high is the key level for ETH. As long as we're above this, I'm confident we can break to the upside. As soon as we start breaking below that 2018 all-time high, I think the probability of a breakdown is significant to take us back to $1,000. But right now, things still look decent for Ethereum. And you do have that upwards target of 2,000 to 2,200 on ETH if it breaks. And the break would happen at roughly 1770. If we go onto the daily chart to contextualize where we sit, similarly to Bitcoin, it's got its range low, it's got its range high. It has clear mid-range, actually a stronger mid-range than Bitcoin because that's the 2018 all-time high. Historically, that's pretty significant. If we put on the MA as well, on the daily, we could see ETH had a clear bounce on the 2018 all-time high and the daily chart as well. So for ETH, it looks more bearish than Bitcoin right now because it's below this key level at 1670. To long ETH, so you know how I did the diagonal on Bitcoin on the hourly? ETH's a little bit different. I would look at it on the 4 hourly. This is actually a very nice candle, by the way. Quite a nice bounce. It looks good. But what you would need to see now for continuation to range high is a break out of the 1670 region. If we consolidate, if I see like, let's say 2 4-hourly candles above, price action still looks bullish. I'll open along at 670 with range high targets. That would be my long target for ETH. On the flip side, if ETH starts to look weak here, it starts to round off at this level, and we see a rejection, then that would be my indicator to go short with targets of the MA at the 1600 level. So that's kind of short-term trading plan for the short-term traders. Once again, I'm not so much a short-term trader. I do it for a bit of fun. The big size comes in, obviously, at the break of range high. That's where we get more interested in big longs. But if ETH can flip above this 1670 region and do what happened here, so we see, when we pushed up previously consolidated, and then we had that next leg up, that's what I want to see again for another test. Because technically we did basically bottom at the previous highs at 1620. Sure, we wicked below a tiny bit, but this was still like a decent test of support. So what I want to see is something similar to the previous time where ETH just consolidates a little bit above, then we look to long with range high targets. That's pretty simple. That's my Ethereum plan. And yeah, you guys know as well that can flip the same way if we start breaking down. So there's 2 ways to trade that. That's your shorter term trade. What the long has targets to range high, the short has targets to the 200 MA. I don't think we quite get to range lows yet. For Bitcoin, it's quite similar as well. You've got targets on the breakout of this diagonal to range high, and then you've also got your next key level of support at 23.9. Once again, the breakout of range highs is much more important from a long-term perspective. So let's talk about some of the alts that could perform well if we do get that breakout, because I think you need to be prepared if we do get a breakout to be longing the right alts. Just remember, if you do want to trade, you can trade on Apex. It's a decentralized exchange. It's very, very good. I've been trading on Apex. It's very good. It's an order book based DEX. So there's liquidity on the platform. It's got, I think, 12 trading pairs. So Bitcoin, ETH, XRP, Doge. It doesn't have every coin, but if you're trading the big coins, Bitcoin, ETH, this is where I do it on a DEX. If you want to trade smaller coins, you can do something on Gains. If you're looking for a DEX, but I think Apex is good for the bigger coins. There's a link in the description to Apex. They also have a trade to earn program, which is very cool. So as you trade, you actually earn rewards in their T2E section. You can actually earn a lot of rewards. And you can claim these rewards and then stake them to earn more yield. I'll have a tutorial. I did a tutorial a couple months ago on how to earn whilst you trade, but I'll do another updated tutorial soon for you guys. But I just wanted to remind you that it's a pretty good exchange to trade on chain. They're obviously a sponsor of the show, but I still believe they're one of the best DEXs. So that's why they're a sponsor of the show. And it's interesting what I'm seeing actually on the Bitcoin chart right here. That on the 30-minute, that trend also looks pretty clear. So you've got that diagonal if you want to draw it in this way, which is what I drew on my chart. But yeah, if you want to trade an Apex, there's a link in the description. You can trade to earn, and yeah, it's good to be trading on a DEX. What I've actually done, just so you know, I'm actually going to start live trading a bit more on the shows, just to be a bit more transparent. I do trade with a smaller percentage of my portfolio, not a lot of size. But what I've done is I've consolidated a lot of on-chain assets into like various wallets. And I'm starting to do a lot more on-chain trading because it's actually interesting from a psychological perspective how risk management shifts versus on and off-chain. What do I mean by that? Well, what I've done is I've created an on-chain portfolio that I trade with regularly. And that's like my trading portfolio. Once again, less than 10% size. That portfolio is on-chain. Whenever I make significant profits in that, then I pull it off-chain into like, I don't know, a Bybit, a BitGet, and then some of it into my bank account in real life. But I've been segregating a little bit, having some on-chain trading, some off-chain trading, and then real life cash. And that's actually helped me with my risk management a little bit. Because as soon as I make, let's say 10% on my on-chain, I take some off, I put it into my exchange. So I've actually been building cash from just sweeping profits off the top, putting it back into my on-chain off-chain exchanges, and kind of being able to stack my cash balance a little bit in the bear market. And I did a tweet just before, and it said something along the lines of, now is the time to stack cash. And it's 100% right. Now is the time to focus on cash generation because there's a premium on money now versus money later. I feel like a lot of people fall into this trap of waiting for a bull market. They get complacent. And if you're out there, that's okay. I know a lot of you may have gotten complacent, but people get complacent waiting for a bull run. Oh, when a bull run comes, then I'll make my money back. Oh, when a bull run comes, then it's all going to be all right. Why be complacent now and work later when the prices start pumping? Why not work now and reap the rewards later? Because $1 now is worth $5 next bull run, $10 worth next bull run if you play your cards right. Even if you invest in equities after, what could be like a significant sell-off with the S&P having, key levels, those pre-COVID levels still pretty key. If we do come back down there, that's a 12% sell-off. If the stock market eventually reaches its highs again, that's 45% on the dollar. 45 cents on the dollar, right? So $1 worth $1.50 in those terms. Now, maybe it struggles to fight inflation, so maybe stock market's not the best example, but basically the gist of it is because of interest earning abilities, money now is worth more than money later. So try, if you can, get out of the mindset of trying to wait for things to happen. Wait for a bull market to happen. Wait for you to get a pay rise. Wait for you to earn income. And start thinking of ways now that you can make more money. And I know it's sort of simple as that, but just at least be cognizant of the fact that there is a time pressure. Time is of the essence. And the sooner you can make more, the more you can invest and the more you're going to make next bull run. It's really that simple. So for me, that's why I use that on-chain, off-chain example, because I've been just focusing on capital accumulation, a bit less focused on my hodl bags, more focused on narrative trading, more focused on active trading. So I can actually generate some more capital and put that back into my long-term bags at the right time. So stacking cash first and then deciding where to invest later. That's been my strategy, and that's been working well over the past few months. So hopefully you guys can maybe do something similar, depending on your risk tolerance, your goals. Obviously, it's going to be different, but just adopting that mindset, I think, is super important. Just wanted to touch on that quickly. So let's get into the fun stuff now. If Bitcoin breaks range high, obviously, I'm using the word if because it's contingent on a break. I'm not saying this will happen. I think there's a high probability we do. That's why I'm preparing for this scenario. Also a chance we don't. But if we do, there are altcoins that you are probably going to want to be in versus others. Now, you have to determine what you want to be in based on what you see is strong. But to me, there are a few key outliers, and I'm going to quickly go through the sectors that I think are outliers and could perform better in a breakout than others. And I'm going to do a probably longer video on this on the weekend and like really degen, but I want to just name a few of the narratives now that I'm looking at. Because we kind of saw when Bitcoin pumped, at least like faked out above range high, some of the coins that were really, really strong last run just instantly became strong again. We saw AI become strong again. We saw the Bitcoin narrative, like the stacks narrative, become strong again. We saw ZK become strong again. Mina was a top performer. So was IMX. We saw China coins become strong again. The same narratives that were strong a month ago, they're actually still strong when liquidity comes back into crypto. So which of those are still valid if Bitcoin breaks out and which ones haven't run that could run? am I looking at? That's the question now. Remembering it's still Bitcoin season, right? This will shift eventually on a Bitcoin breakout, consolidation, pump to the upside. That'll eventually shift. Usually what happens is Bitcoin into ETH, into large, mid, small caps. What we actually see in the market now is because people are very aware of that flow of funds, we often see small caps running first. Just the market likes to go risk on. Small caps run first. Then you see kind of the pattern continue. So large, mid, small caps. But sometimes it's a bit out of order. That happens, especially narrative-based stuff. Like AI small caps can run a lot harder than other type small caps in like other ecosystems which aren't as popular. So if we look, the first narrative I want to touch on is obvious because it's the top performer of the day. On CoinGecko, it's GMX. The first narrative for me is Perp DEXs. Why Perp DEXs? Why can they run harder than the rest of the market if Bitcoin breaks out? Now, this is obviously all, of course, my opinion, not financial advice. This is just my take on the coins that will perform the best if Bitcoin breaks out. Do your own research on what you think could be the case, but I have some strong reasons why I think some coins can run harder. I think Perp DEXs, they've been super strong for a while. They've had quite a large sell-off, especially like GNS. GMX has had a bit of a sell-off. The reason why is because what happens if crypto breaks out? Volatility increases, right? Because huge moves to the upside, huge moves to the downside, that's volatility. What happens when volatility increases? Well, trading volume increases. People need to trade volatility. Volatility happens as a result of trading volume. So what happens when trading volume increases? Revenue increases on trading platforms, and as a result, fees increase. So how do you expose yourself to increased fees on trading platforms? Well, you've got centralized exchanges like BitGet and OKX. They all have tokens. But it's just much easier to monitor the revenue versus fee ratios on on-chain DEXs, and they are still growing in popularity. So GMX is one that I would look at on a breakout that can actually outperform. You've kind of got two options actually with a lot of these alts. You can wait for a breakout, and that's where your big moves are going to come. If you're more of a degen, you can wait for a pullback. This 21.5 level would be like a major pullback. In that case, this video is still relevant. That's where I'd buy some of these alts next, waiting for a bounce. Hopefully they outperform. But I think for most people, you're better off at least waiting for a break of range high consolidation until you buy a lot of these. Either that or a major pullback. One or the other. Not buying now. I'm not saying buy now. I'm not saying buy here. I'm not saying buy here. That's a shit place to buy. Or here. Right? I'm saying either buy here or here. Now, this scenario, this mid-range scenario, I will update you on when that time comes, right? Because the likelihood of us going to break range highs now is much higher than mid-range. That's just how price works. Probabilities are higher to the upside when your price is higher. It's that simple. So right now we're talking about the range high break scenario, break consolidation pump. On that pump, what altcoins do you want to be in? That's what I'm talking about today. If we get a drop, we'll obviously reconsider, but I'm not saying long into resistance. If you want to take a long, there are decent longs. I already talked about my 1 hourly ETH Bitcoin plans. There are a few coins that stand out in that category. Atom, Phantom, like a few projects which could be good longs there, but that's not really what today's about. Today's about the break of range high. What do we long? But you do have a few options in the shorter term if you're a shorter term trader to trade. So GMX is one of them. I'm more interested in Gains though. Gains actually wicked us $15, by the way, which was absolutely insane on the announcement of its Binance listing. So Gains network is one that I like because it's valued still a lot lower than GMX, but their team's still just as proficient. It's at a 5x less multiple on FDV. It's fully diluted versus GMX, which isn't, although technically it is diluted up to its total supply. GNS also has the ability to increase supply in the short term if need be, but unlikely that's going to happen again. Market cap, even right now, though, on GMX, 682. Market cap on GNS, 233. So it's less. I think it pumps harder. It'll run under the same narrative. Trading volume has been great. Actually, I'll show you the volume now. Like, this is the daily trade fees generated by the platform. The trend's clear post-Arbitrum. What's interesting about GNS, though, is that it's 4x volume super strong. Because on their website you can trade 4x. There's a lot of traders that want to trade currencies on chain, which want to trade on GTrade. And you can also trade like silver and gold, and I think soon stocks as well and stuff like that. So it's going to be like a really just easy, accessible way to trade on chain. And that's why I think people go there, because they want access to a variety of assets. You may not get, there are trade-offs on GNS versus like other DEX models, but the main trade on, for lack of a better word, the main reason why you trade on it is because of the ease they can spin up new pairs and the ease of trading different types of products. It's just much easier than like an order book where you need to get liquidity, which has its own benefits, like organic price discovery, but in practice doesn't have as many pairs for a lot of people. Someone said, fill my GNS bag's already at 160. Same. I bought it $1. I bought it 130. I'm still holding a lot of it, full transparency. Obviously I'm way up. I've also taken profits along the way, of course, as I believe you should. If you bought in at 160, not financial advice, maybe you want to consider taking some profits. You probably should have by this point, because, I mean, you got to, when something doubles, at least take 20-30% off the table. But, and in our case, we're up 10x at one point, and now we're up 7x. So yeah, I'm up a lot. But in terms of like a short-term trade, that's differently to like any like longer term position that's traded differently, and that's obviously on the breakout. I think Perp DEXs could perform well. So that's the first narrative I'm looking at, GTrade being one of them. GTrade is a show sponsor as well. We're not sponsored to talk about the token. Just want to make that clear. The token is purely my opinion based on what I think. The platform itself, that's very different from the token. That's a product. If you want to use the product GTrade, there's a link in the description if you would like to trade on the platform itself. But the token is a different discussion, of course. Then you also have KWENTA, which is a synthetics-powered DEX. This, I think, catches a bit if GMX and GNS do. So this is what I'm looking at on a breakout as well. It's come down significantly. This is maybe one you could like consider DCAing into on a major dip. I think Gains is actually in the same position as KWENTA. Probably something you could look at on a major dip. As I said, not now. Either wait for break of range high or wait for a significant pullback. Either way, this is one I'm going to buy at some point, whatever scenario happens first, because their tokenomics are really good. The platform's nice, and it's powered by, it's very different from GNS and GMX. Drake on Digital did a great thread if you want to check that out on Twitter. But KWENTA leverages the benefits of synthetics whilst providing like a very good trading experience with elegant tokenomics design. So it's good. I don't own it yet. I'm looking at it. That's one of them that I'm looking at. The other narrative I'm looking at is AI, actually. If we get a breakout, AI is not going away in the real world. So if it's not going away in the real world, I don't think it's going away in the crypto world either. And it's funny because when AI first pumped, everyone was saying it's just a short-term narrative. I don't think it is, because once again, Bitcoin pumps, AI is the first thing to pump. AGIX rips. It's not a coincidence. If Bitcoin pumps, AI still is too hot to ignore. It's still the rage of the real world. It's still going to perform in crypto. Are a lot of AI projects Ponzi AI projects that aren't really AI? 100%. And I would stay away from super long-term positions in this. Maybe with the exclusion of a couple projects. If you really like them, you can DCA long-term. But short-term, specifically, I think AI can perform very well if Bitcoin breaks out. ChatGPT 4 was also just announced, probably one of the catalysts, as well as Google Workspace AI integration. Lots happening on that front. And the AI narrative is really performing well again. Now, you have had a pullback today, which is good, because things were running. But yesterday, AGIX was one of the top performers. And if we look at the AGIX chart, you probably want to, I mean, if Bitcoin breaks its range high, probably going to coincide nicely with a break of the 55-cent level for AGIX. So I think if you're a short-term trader, you can long around 44 cents. Or you can wait to long in this zone. I still wouldn't use high leverage on this though, because it's so volatile and like very easy to get stopped out. A lot of people are going to have their stops around this region. In terms of like how AGIX could perform, if Bitcoin breaks, AGIX likely breaks. It's actually look very similar. Like if we compare it, AGIX is 23% away from its all-time high. I mean, not all-time high, range high. Bitcoin's much less. It's like 3% away. But if Bitcoin reclaims its previous level, which is 7% away, I'm pretty confident AGIX moves 20% if Bitcoin moves 7%. Pretty confident. And that's going to coincide with the breakout of its high. Now, obviously, it has this previous level, which is also important, 67 cents, but this has been the main level of resistance. So a breakout of this zone could definitely mark the beginning of price discovery for AGIX. And that is where I would look at that on the breakout. If we get that dip, then you've got this as a key zone. And then this is a key zone as well. So you may want to consider laddering in, but that's like a different discussion based on how you like to trade, right? I'm more waiting for breakouts, but if we get down there, we'll reconsider, and I'll of course keep you updated. I stream like basically every day on what my plan is there. ChatGPT obviously has been a major trigger. We're now seeing a lot of new bag holders / spot buyers of AGIX. So open interest for AGIX increased significantly. Now, I do think AGIX is, I just want to make sure you know where to trade it. I think it's got major exchange listings. Yeah, it does. It does have, it's on BitGet. So there's a link to BitGet in the description. You also get an $8,000 sign-up bonus. That's going to have most of the AI coins. The ones that aren't on BitGet, they're likely going to be on Bybit. You've got a $30,000 bonus there. So either one of these exchanges is going to have most of the tokens. For the ones that aren't on major exchanges, that you can't access through these links, you may have to go to a DEX like KyberSwap. And if you're trading on chain, then it's a good idea to do it on a DEX where you can basically choose the chain you want to trade on. Got to switch networks, one sec. Choose the chain you want to trade on and swap into an asset you like. So basically pick the asset. It's going to route through the best trade route automatically for you, give you the best price, and you can swap into that on KyberSwap. It's basically going to like aggregate Uniswap, KyberSwap. So yeah, if you want to, I think most of these coins, obviously they're on DEXs across, depending on what chain you're on, you'll be able to find a chain with them. But like AGIX specifically, I know it's on Bybit, BitGet, so you got links to that in the description as well if you want to get those bonuses and trade any of these coins. So the other thing I'm looking at is Filecoin. Filecoin's interesting. You've got this key level on Filecoin at 6.3. Once again, Bitcoin breaks out, Filecoin holds. I think we can definitely look at a push up to an all-time high for Filecoin. That's at 99.5. So from its breakout to the top, that's a 50% move. That's fucking massive. If you catch a 50% move on leverage, you're basically, you can use 3x, right? If you don't want to get stopped, and you'll still make like 150%. It's like almost triple your money territory. So definitely look at Filecoin if it breaks out. Why? Because FVM just went live. There was a lot of hype pre-FVM, and now there's a sell-off. So buy the rumor, sell the news. Flatline, breakout, buy. Basically. Like in general, it's way better to buy after the news than before the news. And now if you buy, you're buying after the news. Much better. From a long-term perspective, dilution worries me. That's why this video is not long-term. It's more talking short-term. FVM's very cool. I would check it out. I won't go through this whole thread today, but it's extremely cool. It's extremely cool. It's going to allow DeFi, tools, etc. to be built on Filecoin's virtual machine. I think it's going to be a cool ecosystem. And I'm looking forward to seeing how Filecoin progresses. It's definitely a project I love from a fundamental perspective. I don't love its dilution. You can see it clearly here, 400 out of 2 bill. Tokens actually diluted. I don't love that from a long-term perspective, but short-term, that doesn't really matter at all. And I think the market is it's very aware of the dilution to the point that it would only really affect the market if we had a huge dump. So if we had bearish conditions for an extended period of time, then supply pressures are going to affect prices. But supply pressures don't really affect prices in uptrends as much because there's enough buy volume to counteract supply pressure. And also the market largely prices in a lot of these unlocks ahead of time. Once again, though, it doesn't really matter if you're short-term trading. Better late to the rally than early to the fall. Better late to the rally than early to the fall. Yes. Yeah, technically, yeah. That's a bit of a brain twister. IMX also going to have news soon about the utility upgrade to their token. I think they're revamping their tokenomics. The biggest token utility upgrade in history is coming. Lots of hype. IMX is a fantastic product. I really like it. And the chart looks amazing. So I've drawn this blue dotted trend to outline momentum. I didn't draw it in with like a solid gradient because I think it's not like the greatest trend line, but it is a momentum trend. The bigger break you want to look for is the break of the horizontal at 1.2. If IMX breaks that level, I mean, let's just go into the weekly to see like what's next. And there's no historic price data. I mean, 270 is kind of that next key zone. So, and I want to just make sure this level is on the weekly as well. So go into settings, visibility, put it on weekly, and go back to the week chart. Yeah, you see that level? It's like almost a cup and handle. It is a cup and handle. The breakdown, and then the handle, sorry, the cup, the handle, then the breakout. If that plays out, then you've got the upper price target of 2.6. So this is one I'm definitely looking at as well. It's also got the L2ZK narrative running with it, so that helps. It's probably one of the reasons why it's pumped, and that's got 100% price target on that move. So if Bitcoin breaks out, IMX is what I'm looking at as well. What else am I looking at? I think those are it for now because I kind of bombarded you with a lot of info. So those are the ones for now. I'll keep refining this list as time goes on. I don't think we're getting the breakout today, although it's very interesting to see how Asian Open affects the market now. It will affect how I trade short term. Will it give us an opportunity to long BTC into range highs just for like a short-term scalp? Let's see. Will we come back down and test this level? If we do, and we may have to flip short to 22.7 to 23. I mean, it's going to be a big day for the short-term traders out there. But at least now you have my plan for when we break, if we break range highs. I'm saying when. It's not guaranteed. High chance we do, but you know, still obviously an if. Someone says alts are red. Yeah, they are red. Bitcoin dominance is going up. Of course, alts are going to be red. Someone said GRT. Yeah, the graph, that probably falls under the AI basket. I mean, I chose AGIX for the example of this show, but I mean, under the umbrella of AI projects, you've got many other options, which are good. GRT is definitely one of them. I think Ocean's one of them. Elizabeth, thanks for joining the show. Glad you enjoyed catching it. I'll also be live tomorrow morning, exact same time, to give you any updates. If you don't want to trade any of these altcoins, you've got a few options, but obviously Bybit, BitGet for your centralized options. And if you want to trade on-chain, you've got Gains and KyberSwap as well. KyberSwap's not for leverage though. Gains for leverage. Apex also for leverage. Apex is really good for Bitcoin ETH, I find. So it depends where you want to trade, but there's links to that. Exactly what Sheldon said. Pull back, then pump. Yeah, I think there's a bit of a... Oh, it keeps disconnecting me. There's a bit of an overestimation as to how quickly these breakouts happen. A really explosive breakout takes time, and the market just wasn't ready for that on CPI data. Like, CPI pumps are rarely sustainable. So until we know fully if we're going to get a breakout, the market needs to start generating some momentum. So we're going to need some sort of news-based catalyst. It very well could be like something that happens with the stock market, Bitcoin narrative taking steam. We're going to need a catalyst, so a bit of strength, volume kicking in, as I said earlier, and open interest to significantly increase to get enough volume to push through. Because the more you test, the higher chance you have of breaking. But it definitely needs to break soon. I would say within the next week, or like, you know, the chance of us coming down become a lot higher. Takes days to a week to confirm. Yeah, exactly. I think this is the other thing. Like, if you're on the hourly chart, it's going to take like maybe 5 hours to confirm. If you're on the 4 hourly chart, it might take 2 days to confirm. But if you're on the daily chart, which is like pretty much the main time frame most people look at in crypto, you know, this can take I mean, a week to confirm, right? So don't get too caught up in short term, what's happening today or tomorrow. Think bigger picture and give this a few days to play out. I mean, on the daily, it still looks okay. On the shorter time frames, you've got some headwinds. As long as we hold 24, though, short term, it's all right. But look, on the daily confirmation could take some time, as Crimson said. This could take a couple of weeks. And on the weekly chart, it could take a couple months. But typically we see tests happen in like a week. Like this was about a week. Rejected. This has been like 4 days. Let's see what happens over the next week. Let's see if one of these candles results in a breakout or whether we get rejected again. You'll be able to trade it either way. You'll see the rejection happening. It's hard to short this zone though, because people might do the opposite of last time. Instead of shorting 25.2, some people may short a bit higher, expecting what happened last time to happen. And when you short higher, what happens? People get liquidated higher. When people get liquidated or stopped out higher, the pump goes higher too. So that could be your catalyst to 28. People actually starting to short 26 and not 25 because they're scared of getting wicked out. It's definitely something that can happen. So that would result in a more explosive break. For the altcoin trades, better to wait for a conclusive breakout, so a confirmation breakout on a higher time frame. For your short-term trades, yes, you can trade breakouts. It's just not going to be with as much size as your confirmation trades. And that's the other thing. Black Sale said something. 5x is not easy to liquidate. Yeah, I mean, you don't need to use crazy leverage, guys. I even do a lot of spot alt trading these days. I mean, obviously, it depends on how much money you have. But like, a lot of times I'm more comfortable trading spot and DCAing into a position, even if it's like a week to 2 week hold, than going in with crazy leverage and then having to have sleepless nights over me getting stopped out. Also an option for you to just use lower leverage, right? Because leverage is a tool that can be great, but also unfortunately wrecks a lot of people. And it can get you wrecked a lot if you don't use it wisely. So you don't always need to be greedy. Sometimes more size and less leverage is better. So I will see you tomorrow. I'll give you an update in tomorrow's show. In the meantime, if you guys want to do a little bit more further research on what I said, I think it's important to keep learning away from these shows as well. What I would research is some of the alts I talked about today. Look at the AI narrative. Start researching some coins in that niche. I think they can run if Bitcoin breaks. Look into the Perp DEXs. So I mentioned a few: GMX, GNS, KWENTA. Maybe look into KWENTA. Do a bit of research. You've got some of the more degen ones on like Phantom, like MPX. You've got Level on BNB. Research them. I would also look into the ZK narrative. Have a look at IMX. Have a look at some other coins underneath that maybe haven't run yet. Dusk and Mute, I know last run were pretty strong. Just dig a little bit deeper, and then I'll keep you updated on what I personally do on these shows. I will see you tomorrow. Hopefully we get a bit of market movement by then. We've got Asian Open in 1 hour. So for the traders, get ready. In an hour, we could see some movement. And until then, I will see you later. Have a lovely day. Peace out.